Okay. Hello everyone. So we'll be discussing the concept of strategic risk management in this video. And let me first let you know what exactly strategic risk management is. That is its basic concept. And the most important thing before starting the lecture, we need to understand what is strategic risk management a part of. Yeah, what discipline does it belong to? So this is a part of corporate finance, and risk management is basically a part of a part or a particular unit in the subject of corporate finance or strategic corporate finance, where we need to first understand the concept of risk, what kind of risks a business is exposed to, and then after studying various kinds of risk, we need to understand what exactly is the process of its identification and how exactly do we have to deal or how exactly a business should deal with such kind of risks and what measures can be taken to minimize those risks, if not exactly mitigate, to at least minimize to a certain extent. Okay, so as you can see on the screen or in the PPT, we have a few concepts to cover here under under this topic, that is strategic risk management. We'll first understand the very basic concept of strategic risk management. Then we'll be moving to the next topic, that is types of risks. Then we'll be understanding the components of strategic risk management. And the last topic for this session will be principles of strategic risk management. Rest, all the last four topics will be discussed in the next video. Okay. So let's start with a very basic concept of strategic risk management. Okay. So as the name indicates, risk management basically refers to a process of recognizing risks or identifying risks, uh, and what are the potential causes of the risk that are taking place, or what are the potential effects, what are the effects of risks in our business, and what are the relevant actions that we as entrepreneurs can take, or as business person, what are the relevant actions that we can take to mitigate such kind of risks. Okay, so we need to understand that risk can arise from both internal as well as external factors. We do not have absolute control over the external factors like changes in government policy or anything. However, we have uh, uh, control uh, to a certain extent on the internal factors, that is uh, manufacturing failures or shifts in consumer tastes and preferences. So these are some of the things that we as businesses do have a control on. And by working on these factors, by trying to work on the or by trying to understand the causes and effects of such factors, we can actually understand what relevant actions we as business can take to mitigate such risk. Okay, so, uh, basically, as I already mentioned, strategic risk management refers to the process by which we or by which businesses recognize risks, identify the causes and effects, that is, what are the reasons behind these potential risks, and also simultaneously identify that what kind of actions can be taken to mitigate these risks. Okay, as I already mentioned, risk can arise from uh, internal as well as external factors. Okay, internal factors are basically such factors that are controllable to a certain extent, and by working on which, yeah, by making a few changes in which we can mitigate risk to a certain extent. However, external factors are such factors that are not under the control of businesses. For example, changes in government policies or demand structure, or changes in the trade cycle phases. We have different phases in the trade cycle. So those are the changes that we do not have a control on. Okay, as business. So this is what concept of strategic risk management basically states. Okay. Now the problem with risk is that it can basically impact the productivity of our business. Yeah, it can basically hinder with us in accomplishing the goals of our business. So these are some of the problems that we can come across while performing our business. Okay, so for these reasons, we actually, every business basically needs to implement very effective strategic risk management policies to ensure that we do have certain ways, relevant ways, or relevant actions, or list of relevant actions that we can basically use or implement to mitigate such risks. Okay, now, so this was about strategic risk management. A few some more information is mentioned here about strategic risk management, that it is a fundamental aspect of the company's strategy. Yeah, for it's basically, and also while doing the components, we'll understand that is sorry, while doing the principles, also we'll be understanding that it's an ongoing process and a proactive process. We'll also understand what exactly proactive as a principle mean. Okay, so we just need to understand how important, how significant risk management is in the present time, because we are all aware, we have, I believe, we have uh, understood, we have already studied about the concept of business environment, which basically tells us that business environment, that is external environment, is extremely dynamic, which means constant changes are taking place. So it is extremely important for businesses to be aware of what kind of threats they might have to face at a certain point of time, as a result of which they need to make certain decisions or take immediate actions to mitigate or minimize those risks. Okay. Okay. So now let's move to the next subtopic, that is different types of risk. What kinds of risks a business might be exposed to? Okay. So the first category of risk that a business might be exposed to is strategic risks. And as you can see in the PPT, certain examples of strategic risks are given. Like if a new business is entering a market which already has very high competition, or if there are changes in the consumer preferences or trends. So these are the risks. So basically, strategic risk means such kind of risks that are related to, yeah, for such kind of risks that arise when businesses make some changes. Yeah, businesses make certain decisions that such decisions that are likely to impact the business environment, or that are likely to impact the organization's goals, objectives, basically. So these are strategic risks. Okay, when we are basically trying to change these strategies or work on the strategies of the business. And okay, some of the examples are mentioned here. Then the next category of risk that a business might be exposed to is operational risks. Okay, operational risk, as the name indicates, if there are certain risks in the day-to-day operations of the business. What do I mean when I use the term day-to-day operations? That is the internal processes of the business. What are the day-to-day activities that businesses are undertaking? Okay, so in those day-to-day activities, if there are certain issues that are arising, or if there are certain disruptions that arise in the day-to-day operations of the business or day-to-day activities of the business, so that is what we term as operational risk. Okay, and as a result of these disruptions, a business's goals that it might have set, for example, if a business has set a certain goal that we'll be, by the end of the day, we'll be producing 100 units of certain commodity. Let's say it has to produce a certain quantity. Okay, so a certain target has been set. Now, due to changes in the internal processes or due to disruptions in the internal processes, uh, the output might be impacted. They might not be able to reach their the goal that they have set. So this is one of the drawbacks that we can see and we can understand of of operational risk, that due to the problems in the internal processes, also our goals, a business's goals can be impacted, negatively impacted, basically. Okay, examples of operational risks are mentioned here: supply chain disruptions, or if inefficient processes, or if sometimes human errors, as a result of human errors also, certain problems can arise. Then the next kind of risk that a business is exposed, and the most common kind of risk that a business is exposed to, is financial risk. Okay, that is such kind of risks that are likely to arise as a result of change in the currency exchange rates, or as a result of change in the interest rate, or default risk can also arise. Default risk, as in if a business has lent certain amount of money to some debtor, and the debtor makes default in payment, that is, the business is not able to recover that amount, it turns out to be a bad debt or something. So such kind of risk can be termed as financial risk. Okay, that is risk associated with fluctuations. What kind of fluctuations? Fluctuations in the currency exchange rates or fluctuations in the interest rate, which is likely to impact the amount that businesses have to reimburse to the banks or commercial institutions from where they might have taken certain amount of loan or these things. So these are a part of financial risk. Next category of risk that a business is exposed to is compliance and legal risk. A lot of times, and as we are already aware of that, of this, that certain businesses are required to comply with certain regulations, certain norms, certain rules. Okay, now, in case a business fails to comply with these rules, these specified rules, it will have to pay certain penalties for violating such regulations or something. Okay, so these kind of risks that a business is exposed to is what we term as compliance and legal risks. Okay, next kind of risk is market risk. That is when your demand, the product that you're offering, the good or service that you are offering, if its demand declines to a certain extent, because it's obviously you cannot expect the demand of your product to be at a certain you have to follow a certain trend and to always increase. There can be chances, or maybe as a result of changes in the trade cycle as well, there can be a fall in demand of the product or service that you are offering. So this demand decline in the market demand of a product or service can actually serve to be a kind of market risk. Okay, and basically this is arising from an external market condition, so it's not even something that is controllable on the part of the business. Okay, price volatility is also one of the risks. Okay, then environmental risk, that is any kind of risk that a business is exposed to as a result of natural factors as in natural calamities arise, flood, earthquakes, or something. So businesses might have to face certain losses as a result of damages in their storage or warehousing or something. So such kind of risk are termed as environmental risks. Okay. Now, these are the five kinds of risk that every business is likely to be exposed to. So, these are the kinds. Now, I hope you understand the concept of risk. If we are studying the concept of strategic risk management, what are the kinds of risk that we are working against? Okay, what are the kinds of risk that businesses are working against? What are the kinds of risk that they are exposed to that they need to figure out ways to mitigate, basically? Okay, moving to the next topic of the day, that is components of strategic risk management. Okay. So components of strategic risk management, basically you can understand that with the help of this, you're also trying to understand the process. Okay, what process is followed by businesses, okay, to deal with risks. Okay, so the first is risk identification. That is the first thing. Of course, it makes sense that the first thing that businesses need to do is identify the potential risk that they are exposed to. Okay, or the potential risk that business might be exposed to. Like we have seen five kinds of risk already in the previous slides. So it's not necessary that every business is exposed to all five kinds of risk, or there are many more kinds of risk as well. It's not necessary that every business is exposed to every kind of risk, but so this is the first thing that a business needs to do, that you identify what kind of risk you are exposed to so that you can work accordingly. That is, you can uh, make decisions and take actions relevant to your risk, or actions relevant to the kind of risk that you are exposed to. Okay, this is what we term as risk identification, wherein a business simply needs to just identify if this is the area of risk, these things are need to be identified basically. Okay, so whatever kinds of risk it is. So the next thing, that now that we have identified risk, the next thing is now we'll be assessing it. That is what is termed as risk assessment. That is, now we'll be trying to identify what is the impact of whatever kinds of risk we have identified, whether it is financial, strategic, environmental, operational, or legal risk. What is the impact of all these kinds of risk on our business? If we are aware of the fact that there's a particular risk that has a lesser negative impact, maybe we can not prioritize it for now, and we will be prioritizing mitigating those risks that have a major, yeah, considerable negative impact on our business or on our productivity. Okay, so this is what we do through risk assessment. That is, we are just, because we have identified risk in the first step, here we are simply trying to understand or assess or basically calculate. We are making a calculated guess here, what is the likelihood yeah, what are they, what exactly, to what extent basically this risk is likely to impact my business. This is what we term as risk assessment. Next step, we have assessed, we have calculated the potential risk. Yeah, we have calculated the impact of risk. Okay. Now, next thing that we need to do is, now that we know clearly the operational risk is likely to impact my business to this extent, financial risk is likely to impact my business to this extent, and so on. So now I can prioritize. Prioritize as in I can basically prioritize the which of these risks, or which category of risk is the one that I need to prioritize and work on. Okay, on priority. And of course, we as businesses will be choosing that kind of risk, which has the maximum amount of negative impact, considerable amount of negative impact on our business. That is what we term as risk prioritization. Okay, what are we? How are we prioritizing these risks? We are prioritizing on the basis of the impact, negative impact that they are causing on our business. Okay, so we are prioritizing accordingly. Next, taking actual action, which we term as risk mitigation. Now we are actually developing strategies. What strategies do we have to follow to try to manage the risk that we have identified? Okay, there are certain examples of mitigation activities are given: diversification, hedging, insurance, and contingency planning, that we'll be doing in the next lecture. Okay, risk mitigation strategies will be developed and accordingly implemented here. And last is risk monitoring and review. That is, we'll be constantly monitoring, because it's not likely, once we have sorted, we have mitigated the risk, so it is not likely to occur again. So this is basically a continuous process. And for efficient functioning of the business, we always need to ensure that we keep on monitoring our risk, we keep on reviewing our risks, okay, to basically ensure that that we ensure effectiveness is maintained, okay, and what are the areas where we need to improve. Okay, so these are the three topics that we covered. Now, the next covering the next lecture, that is principles and importance of strategic risk management. Then we have risks and benefits and tools and techniques. How do we measure risk in our business? We have qualitative and quantitative tools in that. Okay, which will be covering the next lecture. Okay, so that's it for this lecture. Thank you.